Magic numbers met, stock market down. We need to talk about how to profit from this. I am Dr. Stock, Doctor of Education, and the stock market, like the orange that stopped rolling uphill, ran out of juice. It is my mission in this video to make sure that that joke was not the best part of it. I want to take you to the markets and show you what exactly went on, how exactly we're playing this in order to benefit from either the upside or the downside of things. And I will also show you about Moomoo. I will show you about how to see my buys and sells through the Patreon, and also tell you about my options course that I have available through that Patreon as well later on in this video. In the meantime, I do want to get right to the charts on this one. So we're going to start off with SPY as it tracks the S&P 500. Whoa, that is not it. Let's bring that back down again. Let's try again. Abracadabra. Here's the S&P. Here's the SPY, I should say, tracking the S&P 500. And on this one, we sort of look like we're in a bearish channel. And it's a slightly different look than what we have for the Qs. And I think that what we have happening here with the SPY is that because it's a different mix, it doesn't have as heavy weighting in tech, especially big tech, as we have the weighting for the Nasdaq 100. For the Qs, we don't have it propped up nearly as well, so this is most definitely something to watch for. The magic number that I talked about is listed here in magenta. This was the 430 number, and I said if we broke that, we could go down to 426. What did we close at? 425.88. We actually bottomed out at 45.02 was where that low point was today. And now that we have a lower low, the genie's out of the bottle on this one, and it is possible that we press down further on this over the next several weeks. So as we look ahead from here, really, we could possibly retest resistance on the way back up. We could see 430 retested. We could even break through it for a little while and even come back some of these other areas. But staying below the 50-day, staying below this trend line, either one of those things is still a sign for us that we're not yet time to ride back up from that. A higher high would be a clear sign of that. As a matter of fact, something I don't talk about too often, but it's worthwhile to mention sometimes, are the Fibonacci retracement levels. So if we go back to this previous peak that we had, and we go down to the most recent low that we had, and we look for the 50% level, which we can actually put up on here. If I just click onto the percent button, there we go, 50% retracement level as we have on here. Let me zoom in a little bit, and I'm going to have to read it off on screen just in case you can't see it. That 50% retracement level comes in at 436. So that would be the level that we would be watching for. Actually, I can adjust that a little bit more to read a little bit better for us. So let me click here, drag, there we go. And that shouldn't have too much of an impact on it. 437 is what we're looking at. I actually had that down as 438, that we could possibly come up and tag that along with the candles besides just what we would see on the Fibonacci for the retracement level. So I'm actually going to stand by my stamp of approval for 438 being that ultimate retest level that we would see. And should we come back down to this diagonal support here, I think that we could possibly break down further if we don't break through that sooner. And like I said, we do want to play both sides of this market. We would be set up for it. And so I will switch over to the Qs now and tell you how exactly I'm playing this as we take a look to see what we have for this. So on the Qs that I have here, this is QQQ, which tracks the Nasdaq 100. What we have for the low point here, the low was 354.20, and then the low today came in at 353.21. So we put in a lower low on this. Now, where did we close? We closed at 354.21, which is just above this previous low that we had, but that doesn't change the fact that we still saw that breakdown. And I still think, like I said in a previous video, that the SPY is going to be the thing that leads this rally, or more specifically, the S&P 500 is going to be the thing that leads this movement downward, as I should say. Now, with that said, with those support levels that we have currently being met, it is possible that we see a bounce happening from there. As a matter of fact, let's put up the Bollinger Bands and talk about this. So we had moving from this 1 day down, 2 days down, and then on the third day when we opened below this lower Bollinger Band over 2 standard deviations away from the mean, we bounced a little bit, and then now this fourth day we closed down even a little bit further. So one of two things can happen from here. One is that the market does keep dumping off from here and that we do break this support, although I think that it is fairly firm support as we look at it right now, seeing this at its 354 level. And that 354 I said was going to be solid support for us when we look at the Qs. So from that, it is possible that we drop down significantly from there. Let me take away some of the noise on this chart so we can actually see some of its details that are here. So we actually have a little bit further. We go down to like 351 and then finding firmer support from there down to 345, but that would be a significant fall. And so we'll be watching for those levels. Now, it is also possible that we retrace from here and that we actually start to see something between 1 and 2% being given back to us over the next several days. We do have some hurdles to overcome in that, one of which is the fact that the momentum is still looking bearish. It is still pointing us downward. So that is most definitely something to be watching for on that momentum indicator. And I did put out a play today that's kind of pretty tricky, and it is a hedge against the rest of the plays that I've done in this market here. So I'll talk about that in a moment when I get to them, but we are nearing 30. You can see what happened last time that we did that. However, I think we're under different conditions, and the fact that we recovered strongly off of this with a green candle at this bottom one right here told us that we were going to recover a little bit from there. We did cross back over the 50-day, which was strong, and that's something that we're going to be looking for as we watch this play out. So guys, this is your chance to get your 16 free stocks from Moomoo. The link down in the description, you'll find it, click it, sign up, use these deposit levels, get this many free stocks, free share, Tesla, or Google involved with it. If you want to see the buys and sells, and particularly how I'm playing this, you can see them as they happen over at the Discord, which is available through the Patreon, where I also put up my research and stock analyses. And if you want to see my options course from the very beginner to advanced trading strategies, that is also up there for you as well. With that said, I want to move over from talking about just general market analysis into specifically how I was playing in this market. So let me put the charts back up and then we'll go right into that. So let's bring charts. There it is. And now we'll switch over to TQQQ with the triple leverage. And I want to tell you about some of the other options that I closed out today, by the way, besides just the ones that I opened today. So let me get rid of the Fibonacci's right here so we can take a look at this. So for TQQQ, I opened several put option positions on this one of which I opened yesterday. 2 more positions taken today, and those have progressed pretty well. So taking put options positions against TQQQ, the T is for triple leverage. Whatever happens with the Qs, the Nasdaq 100, this attempts to triple that effect, so it magnifies that effect by a factor of 3 when we look at that. So for this one, this was down almost 4.5% today, so very significantly down. And that's exactly the sort of volatility that I'm looking for with the options to make the most out of it. So between what I took out yesterday, and that option that I took out yesterday is up 10%, but that's an unrealized gain. It doesn't count until you lock it in. Same thing with your losses. But then the 2 that I took out today, one of which is 5% up and the other one is 20% up for those put options. And for this one, let me put the Bollinger Bands back up here. It's very similar to what we saw in the Qs. What I did was I prepared those put options, by the way, are longer term put options, October, November, December, each one of them. And then moving on from there, I took a call option position on this, assuming that sometime between now and the next couple of trading days, between now and Friday, we'll say, it's just an option that is 2 weeks long. That's its entire lifespan here. So if we don't get the bounce, those things are done, but there is a hedge just in case we get a bounce on that, and that will help to finance some of the short positions that I took with the put options that I put out there. And should the market continue to sell off instead, well, then I have those put options to help cover some of that risk that I have out there for the call option. So I'm playing both sides of this at this moment. And why did I choose that? Well, because the RSI is already so darn low. We are outside 2 standard deviations of the mean when we look at the Bollinger Bands, and I do think that a bounce is imminent for us, and I don't think that it's a recovery. I don't think that it's something that reverses from where we're at. I do just think that it is something that could retrace for a little while for us, and I'm trying to take advantage of some of the near-term movement that we could see. This is highly risky. So when we go down to higher time frames, like let's go down to the hour chart, for example, and we look at the momentum there, we actually have a double bottom with the momentum here. It'd be nicer if we actually saw some bullish divergence happening here, where these 2 bottoms, that the second one was higher than the first one as the price comes down. That would be some darn good confirmation on the daily chart that we're actually going to recover. You could actually see that happening back here as the lows come up, as the price comes down, and then what happens the next day is that we had that recovery come into it. We don't have that same confirmation here, so it is a little bit more mixed. So we'll see what comes our way when we look at that. And if we looked at smaller time frames, we could see even closer what happened to this, and the fact that we did find some support coming in right around here in the low 34s. So around 34.17, 34.18. However, we don't have that confirmation. It wasn't that we came up with breaking a previous high or something like that. We came into the close. And as we look at the momentum indicators, it's still, like I said, not totally showing us that we're in good shape. Crossing the 50 on the RSI would be a good thing. I like the hourly charts if I'm going to go down below a day. So you can check that out. You can watch that as well. So let me summarize this, and then I'll tell you about my other put options that I closed today, and I'll tell you about how they performed. So I'm playing short just in case we get that fall, and those are longer term options. So I have out to October for the monthly options there, November, put option play for TQQ there, and then I also have a put option play going all the way out to December as we watch this, because I do expect more market weakness coming up sometime within the next couple of weeks, possibly spanning out. I have until December on the longest one that's out there, and I don't want all the time value to go away, but those are ones that time value will be chewed away slower. Put that against the call option play that I put out there that has an expiration that happens in less than 2 weeks. That's the second Friday from now. October 6th is actually an expiration date for those call options. If we don't get that near-term bounce, that money is poof, gone. It's highly risky. And at this point in time, as I said to my Discord members, taking this one is like trying to catch a falling knife, and you're bound to bleed from something like this. So be careful should you do anything like that, and definitely know what you're getting into before you move into them, because it's easy to kiss a lot of that or even all of it goodbye in a very short amount of time. So anytime short-term options, be very careful. Longer-term options, you have more time for what you want to happen, and then you can just keep on playing the bigger market movements, the bigger market trends, because there's more time for them to play out. All right, so today what I do, well, I told you before that I still had a put option out in Datadog, and for this one it was kind of stalling out on me. I didn't know if I was really going to catch that same opportunity, especially the market bounces, and the expiration on that one is this Friday. So I wanted to get out of that one. So I squeaked out of that one with a 4% profit. When we put that against what I had yesterday, I had a 36% profit on the options that I closed yesterday on Datadog. So altogether, that worked out very well for me. The first closing position worked a lot better than the second one, but I'll take the 4% profit anyway on a stalled out option. And then I did an intraday play today on SoFi, and SoFi actually also stalled out on me. Look at this chart. Let me go here, and then I'll go all the way down to the minute chart. And look, actually, that's probably too close. Let's go to 10-minute chart. Look at this consolidation that we had. This thing was just dead in the water. And what I said earlier was that volatility was going to be something that was our friend when it comes to options, especially when that volatility is moving in a direction that's very favorable to you, or, there's other options plays you can out there to take advantage of either direction. But when you're playing a single direction even, and the stock or ETF, whatever it is, the underlying security is moving in a favorable direction, well, that's a really good thing, because that's where you stand to make a lot of profits. I showed you that SoFi ended up being dead in the water, where I thought that it was possibly going to drop more with the markets, and it held out anyway. That's a really good sign for SoFi itself. It's not a really good sign for the fact that I was shorting it with a put, and I squeaked out 6% intraday. So 6% for the day, it's not bad. It's still a profit, especially in a time when it was trading sideways anyhow. So I'll tell you what, it wasn't moving how I wanted to. I was willing to hold it for just a little while longer if we got more movement, make it more than a day trade on this one. But because it didn't have the movement to it, and I didn't really know what to expect for tomorrow, we're going to see a further drop, or we're going to have this rock solid resistance happening right around the 740 level. I just cut my ties, took the 6% profit, and then that leaves my capital open for other plays that might be a little bit more favorable for me. So that's how I played that, guys. And like I said earlier in this, if you want to know more about those options plays, check out that options course. It goes from the very beginner. Right now, it just covers the very basic ideas of it, and I'm going to start getting into the applications of those very soon. This week, I'm going to put up more videos for that, and I'm very excited about the way that the community is shaping up. Just wonderful, awesome people over there at the Patreon, eager to learn, eager for finance, bring lots of ideas. They're starting to share news articles over there, asking about different catalysts, and I couldn't be more pleased with how it's shaping up. So thank you guys for watching this video. Come on over and join us at the Patreon, see my buys and sells, see how I'm playing this market, see how I'm profiting from it, and join that community. And then Moo, get your free stocks by using that link down in the description. Thank you for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.